Life, Loss and Legacy is a general information podcast only. This does not constitute professional advice as we simply don't know your individual circumstances. If you do have any questions, please be sure to contact the guests of the episode. It should also be noted that the opinions expressed by the guests and host of the podcast are theirs alone and do not represent the opinions or perspectives of their employer or any other associations. That's enough warnings. Let's get started. Hello and welcome back to Life, Loss and Legacy, a planning solo podcast dedicated to helping people in those first 3 years after the loss of their partner. My name's Jordan Varga. I'm an independent financial planner with Planning Solo. I'm very happy to say I'm joined today by Stephen Price from Integer Financial Group. G'day, Stephen. How are you going?
Yeah, good, Jordan. Thanks for having me this morning.
Not a worry. Although we've known each other for a little while, so we'll skip through the intro. But Stephen runs Integer Financial Group, and you've also just set up a new business as well, helping medicos on the educational side. What's the name of that business?
Leveraged MD.
Leveraged MD
is the name of that business.
For any people in the medical space listening, check it out. Because Stephen's business is primarily focused on providing insurance advice to medical professionals and sort of really detailed, really quality advice and helping on the claim side, which is why I've asked Stephen to join us today to talk about life insurance. So we will hop in, but before we do, Stephen, do you just want to do a really sort of a quick intro, I guess, about yourself?
Yeah, so my background, I've been working with medical professionals now in the financial advice space for 15 plus years. I've been running my own business for a little over 7 years now. Historically, it's been very risk focused, so insurance focused, being life, total and permanent disablement, trauma, and income protection, and gravitating over time as demand has grown for the holistic offering, including superannuation, and we work very closely with accountants and lawyers, and I think we'll probably touch on that today in terms of estate planning, because that's a big part of the advice process as well. So that's it in a nutshell.
And I think
we.
No, sorry to cut you off, but what I'm looking for, because you work in a lot of complex advice. You give a lot of complex insurance advice to very, fairly sophisticated people that are looking for cover across a variety of different entities and structures. And the people we're talking to are the people on the other side of that, the beneficiaries of the insurance who perhaps aren't as across the complexity. And I think what you're really good at is bridging that complexity gap and taking the really, really complex and making it practical for the people that are left behind, which is what we're talking about today. There's three or four main areas we'll be looking at. I mean, I really want to talk about the impact life insurance can have, because you and I know what a difference it can make. But I think we need to talk about why people should have it to an extent, but actually what it means at the pointy end. I want to talk a little bit about the process of actually getting the life insurance money, the mechanics of that, how does it come, what does it look like, that kind of thing. We'll touch on terminal illness, which some people listening may have had some experience with. That may be the path that their loved one took towards the end. And also just try to place it in that bigger picture. This whole series is all about, this is a really holistic approach to the end and managing things for people. So plug it into that. So we'll hop in, we'll get started. Steve, we'll start off on a personal note. I don't want to dwell on it too long because I don't want to sort of dig into your business, but you had experience with the life insurance process fairly early on, didn't
you? Yeah, so I lost my father when he was 49. So we had first-hand experience of both life insurance and income protection, effectively, because he was diagnosed with cancer and he was on his income protection benefit for close enough to 12 months before he passed away. We went through the claims process of the life insurance. So I guess I can give a bit of exposure to that from that experience and also from the client experience.
And the money was left to your mum?
Yeah, correct. Yep. Went to my mother, and there was like a small percentage that went into trust for my sister and I that we couldn't touch until we were 25. So I couldn't use it to go on the see Australia, continue in the World Cup, the Soccer World Cup when they did. It was probably not a bad thing that I couldn't touch it.
That's the thing is, if you gave me money at 18, I'm not having it at 19. I know that much. So it's good to hold it off for little bit longer. Um, so it was your mum and the two of you. What what do you think the impact would have been had the insurance not been present?
Um, yeah, it's a good question. I mean, I think automatically the first thing you think about is like the financial side of things.
Mm,
Um, but I think it's more probably, I mean, well, mental health's, a big theme at the moment in the current environment. But I think that's probably the thing to sort of talk about more is that it's like, yeah, from a mental health perspective, it's just like there's probably a little less stress and anxiety um, around things when life insurance is in place. I mean that's what you hear a lot of advisors talk about life insurance being, financial peace of mind,
mm,
and that's probably that real. Like, it rings true in that situation because, yeah, okay, from a financial standpoint, a lot of people, you know, would be in dire straits if the breadwinner of the family passes on, and so there's the definite need there. So yeah, I don't think we were necessarily in that situation. It was definitely, I mean, from the financial standpoint, in terms of ongoing, yeah, absolutely,
mm,
it was helpful. But I think from the peace of mind, and it's just like one less thing to worry about,
mm,
because obviously there's a lot going through the surviving spouse's head at the time in terms of just from a grieving process, right?
yeah.
So just, yeah, it's more that it's one less thing to worry about, and obviously, yeah, that is a financial component, so that's where it comes in. But I think that's where, yeah, it plays a big role.
And I think one of the reasons I wanted to talk about this today is to normalize that process because I know in our game, you said financial peace of mind. We always focus on the financial. How do we structure the insurance? How is it paid out? How much is needed? How is it funded? All that, price comparisons, all that. Because it's very hard for us to talk about the second part, the peace of mind piece, because you're kind of selling nothing then, really. But until it happens, and it's interesting to hear that
Yeah,
that's
you
kind
hope
of
it's a
the
waste of
focus.
money.
Yeah, yeah, yeah. We hope you really regret paying these premiums for the next 30, 40 years. Um, because I think the people that we work with, primarily widows or people that have lost somebody, there's a panic that comes around money, and so if an injection of cash can help that, avoid that panic, you can avoid bad decisions and you can avoid mistakes. But so yours was a younger family when it occurred. Now that you're working in the business and you've got lots of clients that you're helping, have you seen many situations where the money's been paid out to an older family, maybe empty nesters or the kids are towards the end of high school? Does it have a
No, I haven't
similar
had
sort
that.
of impact?
I haven't had that experience with my client base. Like, fortunately, like I haven't had. Like, I mean, I've had death claims,
Mm-hmm.
which is, yeah, it's sad. I mean, it's a reality of the business that I'm in.
It's kind of a mix too,
Um,
because it's sad, but you're also a little bit proud that they had the cover that you organised for them. I think it's kind of a conflicted feeling.
yeah, it is. It's definitely conflicted
Yeah,
because, yeah, you do have a good feeling about all the advice that you provided and the fact that, yeah, there's pretty large sum being transferred over. Um, but yeah, at the same time, yeah, you kind of like, and because of the age of some of the clients I've lost, right? Like, like I lost a 40-year-old, just before Christmas a couple of years ago. So it's,
jeez.
um, it doesn't like this is the thing, right? With, death and illness and injury. I mean, like your listeners all know, it doesn't discriminate. Um, and so, yeah, I haven't had. But getting back to your question, like I haven't personally had the experience for, yeah, a payout for with dependents at the other end of the spectrum at the older age.
Do you find that as
Um,
your clients age, though, are you shaping the insurance they've got?
yeah, so I think that's where we probably differ a little bit from the historic um, advice in the insurance space. So I guess we consider it like an actively managed insurance portfolio, effectively. Um, so we have annual reviews, and as our clients' financial position is improving, so as their assets are increasing, as their liabilities are reducing, as their children are, being closer to being independent. Although, given the cost of housing, that's
It's going further
being
and
pushed.
further out.
The average, that dependency age is probably looking more like 43 instead of 25, kind of thing. So yeah, that's why life insurance is potentially getting more and more important.
Mm.
But um, yeah, I've lost track
No,
of
no. So,
what,
so you are bringing
what
it
I was saying.
down. Like it's not a set and forget. You're not seeing
Yeah,
somebody
yeah,
there
we're
10 years
bringing it
later.
down. Yeah, we're bringing it down. So so I mean, look, I'm not wanting to deep dive too much into I guess, the advice process, but there's two types of premiums that you can have when you pay for your insurance.
Mm.
So one of those is a level premium, and the other is step. So like a level premium is fixed, and you take it out when you're younger for cover that you're going to hold long term, and then the stepped is the component that you have you hold for a short term because the premium increases each year in line with age. So we take a mix, we
Mm.
take a blend of each, and effectively over time we reduce the stepped component of cover, and the client will hold the level component long term. Um, and so, yeah, we find it's a more cost effective way of them holding, insurance, that the larger sum insured for when they need it, when their kids are young, private schooling,
Mm.
things like that. And once the kids are sort of progressing, towards university, coming out of university, they're not needing that higher sum insured anymore. So they can back it right off. And then you're just left with this amount that can cover any residual debt on the house, or be left as kind of like a legacy kind of gift, effectively, if they did pass. So that's sort of how we sort of go about things.
And I hope that for most of the people listening, the insurance that they're now dealing with, or maybe that they've received, has been managed in that way and has been shaped as needs have changed. It's a very complicated area, especially in advice, but I think a retail advised client should have a more appropriate portfolio than somebody that maybe set and forget it a long time ago. So, so we're talking to people that somebody has passed away, and now there's an insurance policy. Maybe they've always talked about it, maybe their partner always complained about the price, but now that it's been triggered, it's occurred. So I'm curious to talk about the actual claims process, the mechanics of that. So, I mean, really, I'd like to start with, okay, so, you know, Jack dies, Jill's left behind. Who lodges the claim?
Well, yeah, it's a good question. So, I mean, hopefully they've got an advisor, because, yeah, look, let's be blunt, it's a lot easier for people to deal with an insurer when they're working with an advisor. I mean, I think there's some stats around that
Mm.
in terms of, claims paid and also turnaround times.
Mm.
Um, so either way, there's two components to making a claim, whether you're doing it through an advisor or you're doing it yourself. You need to be lodging claim paperwork, which is obtained through the insurer, and the other component is a certified death certificate. Okay, now that's the component which I think it can be kind of that's a bit emotional. It's
Yeah.
even emotional from our perspective, right? Having to
It's
like
an awkward
ask
ask.
for it.
Yeah.
Yeah, it's an awkward art. Like it's kind of like the ideal process would actually almost be working through working with the lawyer that's involved, if the lawyer's involved, because
Yeah.
it's more a business transaction between the advisor and the lawyer in that case.
And then the client's
Because
only having to
it's
do it
just
once.
it's right,
Yeah.
yeah, because there's just a lot of emotion attached to the situation, and but at the same time, it's like so it's different, right, in terms of from the start, because you're having a lot of meetings, getting your client to take out the cover.
Mm.
So it's important to sort of follow up to make sure they're getting the cover in place. But then on the flip side, in the event of a claim, it's like, well, you're wanting to follow up your client to get these items like the claim forms
Mm.
and the death certificate. But at the same time, it can take a bit of time to get it,
Mm.
because, yeah, although as important as it is, as weird as it sounds, it's not it's not not a priority kind of thing. Like they're organising a funeral, and they're grieving.
I think
So
it
yeah,
is kind of awkward as well, because you're calling them to remind them about the worst thing that's happened to them constantly.
yeah,
Can you get
that's
me the
right.
proof that this happened? Like it is pretty sensitive.
Yeah, yeah.
Um,
So yeah, it's the quick. It's like not talk about loosely, but it's like kind of it's almost like you want a band-aid. It's just what it kind of like just almost try and just facilitate it and get it. Our job is to sort of facilitate and get it done in as efficient way as possible
mm.
to So yeah, they're not sort of thinking about it, and whether that means that you need to go out to see them face to face. I know a lot of stuff's done via Zoom
Yeah.
now, but yeah, in those situations, yeah, we've actually just sort of gone out, done the paperwork face to face, got a copy of the certificate,
I think it's
just to,
courtesy.
yeah, yeah, correct.
With the death certificate, I mean, some people listening, and I think we've touched on it in previous episodes, that if there's an autopsy, that can take months. The insurer will require that to actually assess the claim. So, in the instance we're talking about, Jill contacts the insurer, they send her the claim paperwork. She then fills that out, perhaps with help, ideally with an advisor, but maybe not. And some advisors will take on claims that they didn't write the policy for, so it's something to be aware of as well, because this can be a bit hairy. Fill that out, lodge it, gets to the insurer, ABC Insurance. Who is the person who's actually assessing that claim and who will make the decision about paying it?
So every insurer has a claims team. I mean, I think it sort of differs a little bit in terms of what type of insurance contract it is. So whether it's inside or outside of super, you're going to have a bit more of a potentially a delay when you're lodging a claim through when it's held through super effectively.
Why is
Especially
that?
say like
Can you go through why
an
that is?
industry. Well, so let's look at like an industry super fund, for example.
Mm-hmm.
Okay, so they're like people who think that they've got insurance with their super fund, and it's well, no, yeah, yes, they do, but it's paid for their super fund, but the insurance isn't with the super fund.
Mm.
It's actually held with a group insurance style policy through, say, one of the big insurers like TAL or AIA or MetLife, for instance. Okay, so the claim has to go through the insurer, and then then it then has to be released by the super trustee. Okay, and those trustees, whether it's a life insurance claim, TPD claim, income protection claim, okay, they're meeting. Well, it was, my understanding is they meet around every month, and that's when they're approving these types of things. So depending on when the claim falls, in terms of you'll probably get death claims. There's one definition for life insurance, right? So it's almost tick box kind of thing. Once you provide the death certificate with the insurer, it's done pretty quickly. But depending on the time of the month when that's lodged to the super trustee, then that can be where there might be an extra month, an extra 3 weeks before it's paid, because it's like, yeah, okay, it's going to get the tick off from the super trustee, but then it's it just gets put in the admin system, and you're talking like another 5 business days before it goes to accounts for them to release the funds, right?
I think it's a point worth highlighting too, the super policies, because I think we're going to see more and more. A lot more life insurance is held in super now than it used to be. So there's two parties at play, right?
Yeah,
so you've got to get the insurer to tick off on the claim. So they'll say, yep, we'll pay the amount of money. That's then paid to the super fund, and then you've got to try to get it out of the super fund. So there's two claims processes that run concurrently. So are you doing two sets of forms in that case?
No, you're not doing two sets of forms. It's just the one set. It's just the one set of forms. I mean, I remember seeing some old school advice, and you don't see it too much these days. But I remember, I guess all my sort of mentors in my career, like, and I probably still don't do it too much. I mean, I'm probably fortunate in terms of the clientele that I've got. They've got significant cash reserves to cover those immediate costs.
Yeah.
But yeah, there it is. If there's not significant cash reserves at play, it's worth probably having somewhere between 20 to 50. Or there's probably a minimum with the insurer, but even $50,000 worth of coverage that's held outside of superannuation that can be paid a lot quicker. When I'm saying a lot quicker, we're talking like a month, but a month can be different, right? Because what's a funeral cost these days? 15 grand
minimum, yeah, minimum.
And not everybody has 15, 20 grand. So not everybody has that lying around. Okay, so that's where it's potentially worth, spending, a few hundred a year from personal cash flow to pay for 50 grand of cover, and then have the remaining cover being funded from your super.
And there's that peace of mind as well. So the claims assessor and the insurer makes the decision. The trustee then decides about paying it out, and they are more likely to say yes than not. It's just there's a process and it takes time. To go back to the claims assessor at the insurer, there's a few things that will play into their decision process they need to work through. One of them is really sensitive, and I'm should probably flag that we're going to discuss some self harm and suicide stuff here. Can you talk me through the 13-month clause around a lot of life insurance policies?
Yeah, so all insurers have that clause. So yeah, it's a suicide exclusion. So in the event that yeah there's a suicide within 13 months of a life insurance contract being taken out, then it's yeah that the claim will be paid.
It'll be denied, and
Um,
the money and the premiums refunded.
yeah, it will be nice. Yeah. I mean that's sort of. I mean not look. I mean I don't think really anybody apart from engineers, probably read the 110-page product disclosure statements. Um,
I was wondering where
reads
you
for
were going with that. To
the
be completely honest,
but that's one that's pretty like you can it's pretty clear you're sort of in the policy word and and it's look we state it when
yeah,
when we're they cover it. I mean, people often ask in terms of generally when they're taking a cover, what are the exclusions and things like that. Well, it's just like, well, life insurance, you've got a suicide exclusion. I mean, there's the war on terror. The war on terrorism one is probably a bit more interesting. Like you look at the geopolitical climate at the moment, it's kind of, and if you've got clients that are traveling over to certain countries, to visit family, then that's potentially something to yeah, almost be more concerned about now than say a suicide exclusion. To,
yeah.
to be honest, I think is something to be sort of wary of. I mean, my discussions with insurers have been around there's a war on terrorism exclusion there, but if someone died in that situation and the insurer didn't pay, they're going to get slammed that bad in the media.
Yeah,
They're probably going to pay it anyway,
yeah.
right? So yeah, but that's if you look through the wording, like that's there as well.
So I think if you are coming up against that in your experience, if you're listening to this, it can be really tough to accept. I haven't heard too much of it. We always used to hear stories when we were coming up, but I think it's so prominent now and pretty well known that it doesn't come up too much. But one area that does come up a bit, and you see it in some of the complaints and some of the AFCA hearings, non-disclosure on insurance policies. Can you tell me a little bit about what to be wary of there?
Who who for?
Not us. Let's pretend that
Right.
we're Let's avoid our headaches around it. I guess for clients and beneficiaries, really. I mean, the idea of non-disclosure can be quite hard to confront when it happens.
Yeah, I mean, look, there's non-disclosure and there's innocent non-disclosure. I mean, it's pretty important with the clientele that I work at that they're pretty spot on because at the end of the day, the insurer views doctors and like a judge would view a doctor as having to know their medical
Yeah, they can't claim
situation,
ignorance, can they?
right? So, to some extent, there is innocent non-disclosure for the general public in terms of okay, yeah, there's certain things that might forgot about like from 20 years ago, but if there's medical history of a significant nature, when you're doing your application, it needs to be disclosed. I think that, and I've had this discussion with underwriters. If you're doing an application or you've done one, and this is prompting you sort of to have a bit of think about it. If you've non-disclosed things, if you're over the age of 40, for instance, and you've basically said no to everything on your application, you're probably lying.
Mm.
Okay. And it's really important to disclose your full medical history because, it can be devastating in the event of a claim. I've had I've had a couple of claims declined. Um, one of which just stuck due to non-disclosure, and then I had one claim that I was fortunate, but it was like a 12-month battle where it was non-disclosure. This wasn't for a death claim; it was for a trauma insurance claim.
Mm.
But because of the non-disclosure, they declined the claim and then they cancelled the life, the TPD, the trauma, and the income protection coverage. Now, I was able to battle that over a 12-month period and not only get the cover reinstated, but the claim paid
Yeah,
out
yeah.
because the nature of the non-disclosure was unrelated to what the claim was, and they still would have had it in place. But yeah, you don't want to give the insurer any ammunition, any ability to effectively void the contract, which is effectively what you're doing by non-disclosing.
And I think,
Um, so,
and that's why I wanted to bring this up because well, two reasons. Firstly, I think the people that we're talking to, they can get to the point in the claims denied, and it's because of non-disclosure. There's a really complex emotional reaction to that because it's the person who's passed away; it's their fault. And it's very hard to blame somebody when you're grieving them, I think. So it becomes a really complicated mess. So that blame then gets transferred to other people. So I think the reality is that if you're not telling the truth on your insurance application up front, you're making things harder for your family at the other end. But then there are those cases of innocent non-disclosure, like you're talking about. So it can be really hard, I think, to know when to fight and when it's diverted emotional energy. If it's a kind of situation where people aren't too sure, they should reach out to an advisor, right, to try to just see what they think, or should they keep pushing it
100%.
themselves, or go to a lawyer, or what's the general rule?
I think your first port of call is to go to an advisor. And look, I'd be shocked if there is any advisors out there that would actually turn someone away
Mm,
in the event of a claim. All the advisors I know would probably go out of their way to help the individual. And to be honest, I'd be surprised if they even charge a fee.
agreed. Yep.
Right? They'd be just wanting to help someone in that situation. So your first port of call is to go to an advisor and seek some assistance. Okay. And even if there was some sort of small claims fee, it's going to be worth it because the advisor is going to get, I can just guarantee you, the advisor is going to get a better result than what an individual will battling with an insurer,
Mm-hmm.
um, one on one.
Yep.
In the event that then it doesn't get anywhere, well, that's when you've got to consider going down the legal path. But you've got to weigh up, and that's where an advisor can sort of look at the situation and they can get a hold of the application, look at what was disclosed, and guide you probably with the lawyer and say, okay, well, what are the chances of getting a successful outcome here?
Mm-hmm.
Because you don't want to then go further into the red by having to pay legal fees. Although in insurance claim situations, usually the lawyers are they usually take percentages of a successful outcome rather than necessary fees up front. So it depends on the size of the policy as well.
Mm-hmm. I think that is a really complicated arithmetic, and that's where that diverted emotional angst about what's gone before. I don't want to rubbish it too much, but there are people out there that take advantage of that and bring people into a claims process through the legal channel that it's very expensive, but it's not really worthwhile half the time. Um, so the claims in, we've talked a little bit about the timeline for payment. So you're saying that once the paperwork's in, death certificate's in, and that might take 2 weeks to get the death certificate. It could take 6 months, depending if there's an autopsy or anything like that the coroner needs to get involved with. Once it's all in there, you're talking what, 1 month to 3 months for the money to actually come out?
No. With an insurer, they get a bad rap, but they'll have a claim pay within 1 to 2 weeks.
Yeah. Yeah.
If it's directly with the insurer and there's no super trustee involved, or it's a retail contract with retail super trustee, you'll get it within 1 to 2 weeks.
This is going to sound like a silly question, but I think it's a question that a lot of people don't necessarily realize they have. How does the money come out? Like, is it a check? Is it a big check presented by somebody? How like you've won a golf club championship?
There's no novelty checks when you're doing a death claim.
Yep.
It's just electronic transfer.
And
there's some situations where I've got income protection claims that are being paid by check.
Are you kidding?
Yeah.
What?
Yeah,
what? Really?
Yeah.
To punish the claimant, almost. That's okay. That's the choice.
It's a bit bizarre.
And just from an admin perspective, I mean, I've found that I find out from the clients the money's been paid before I find out from the insurer generally. Like the money's just gone out and then they get an invoice a few days later or they get a receipt. Is that normal or is that just bad experience on my end?
Look, I think it's like anything, right? In terms of like if you're an advisor that is doing a lot of business on the insurance front, you're probably going to have a better relationship with insurers and vice versa on an investment front in terms of fund managers and BDM. So, look, I'm very fortunate in terms of the relationships that I've had, and it's a case of like they'll keep me informed along the way, and we're also asking the questions along the way as to following it up as to when things are happening. But yeah, we'll be notified pretty much like either the day before or the day of in
Yeah,
terms
that's
of
good.
okay, what it's been approved. It's been approved. Funds should be in the client's account, within 3 to 5 business days, kind of thing. So we can then say to the client, look, this is when it's coming. We'll give them. They'll get a copy of the letter. We'll get a copy of the letter that they've got from the insurer, and then we can call them and say, look, if the funds aren't in your account by X date, call us and let us know.
Yep.
But we've never received one of those calls because the funds always hit the account.
That's good. I think you're right. Life insurance do get a bad rap, but life insurance is pretty black and white. So they've been doing it for a long time, so they've got the processes there. Um, with the life insurance itself, with a life insurance policy, you can nominate different beneficiaries. You're not as affected by tax rules as you are under super, so we'll ignore that. We've covered that in a different episode. But Jack's got his life insurance. He's left the money to Jill. That doesn't go through the estate, does it? It just goes straight to Jill as money. That's her money.
Correct. It just depends on how you got, I think, structured though as well. I mean, we advise our clients to speak to their lawyer once they get their life insurance or when they're in the process of getting their insurance set up, and we talk to them about the benefits of establishing a testamentary trust.
Mm-hmm.
So I know you've had lawyers on your podcast before. I'm not sure whether they talked about
We had one
estate
on,
planning.
yeah, we covered testamentary trust because I think they're incredibly powerful, but you need the funding, which is where the insurance kicks in, I suppose, to really help that.
Yeah. So I mean, and that's like, that's probably something we can digress a little bit here and talk about. I mean, when you're getting life insurance, right? Life insurance is relatively inexpensive, and so if you're going to over-insure on something to make sure that your family is adequately protected, then life insurance is where you do it.
Yep.
And then when you've got a substantial amount of life insurance in place, then it's important to have those appropriate estate planning structures in place because, if you've got, 2, 3, 4, 5 children, there's multiple tax-free thresholds. Don't want to say that 10 times fast. But, there's a number of those thresholds that you're going to be meet. So it's a significant tax saving in the event of a claim being triggered. So I think that's, for your listeners, that's something that, if they haven't addressed their will, like if they've got insurance in place, fantastic.
Yeah.
If they haven't addressed their will, go and get a will, and then speak to your lawyer about getting a testamentary trust as well, or the benefits of it, depending on what you've got set up.
And then let your advisor know because they need to work together around the beneficiary side to make sure it all lines up. And I think also if you've been a beneficiary but the money's landing into a testamentary trust, definitely check out our episode around that because there are such big advantages around it. I think some people can sometimes resent not having that money to hand, but there has normally been a really good reason that it's been done like that. And just be sure to revisit just what those benefits are. Speaking of benefits that maybe aren't too prominent or that aren't too familiar to some of the people listening, I want to take the next step along and talk a little bit about the terminal illness benefit that's in, I think, all life insurance policies. Can you walk us through what that is and how it works?
Yeah, it's a good question because I actually don't think it's probably utilised anywhere near enough. And maybe that's because, well, let's talk about what it is first. So a terminal illness benefit is where basically, there's no chance of recovery. So basically a doctor's certifying that the individual is, they've got a time frame and that time frame's effectively imminent. And that's probably one of the reasons why it's not utilised so much in terms of when people, I guess, when the doctor sort of signs off to say that someone, is, definitely dying. It's, and they've only certain months, so forth.
Because it's 12 months, isn't it? So people don't always find out in
Some
a
are
month.
24, some are 24, I
Oh,
think,
right. Okay.
these
Wow.
days. Yeah, some policies are 24, but most are 12 months.
But people aren't finding out when they've got 12 months left. They're finding out when they've got 6 months or 3 months left.
Yeah, it's kind of, I mean, that's really like, I mean, I guess, yeah, from the personal experience as well, right? Like like looking from a kid's perspective, like, when your parents in that situation, like is, I mean, oh, this is because you're young. Like, it's probably different if you're a bit older, but like when you're young, you don't think you actually think you think your dad's gonna pull through,
Yeah. Yeah.
right?
Yeah.
So it's, they, up until the point where they're in a coma, you actually think, you still think potentially that they're not going to die, right? Now, as ridiculous as that sounds,
Not at all. No.
that's like the mentality. I know that's the mentality I had, and I think so. I can sort of understand where sort of people are at, and almost like, well, you don't. I Yeah, that terminal illness benefit is almost maybe considered a defeatist attitude.
Yeah. Yeah. I think I've come
Right?
across that with a few clients. You're right. It's confirming what they're trying to avoid.
Yeah.
Yeah.
So again, I think this is where, and all this stuff comes at a cost, right? But this is where having advisors, like be it financial advisors and lawyers, and having a team around you to support people when you've got someone severely ill and it's going down that path, that can really help, because they can effectively probably take it out of your hands to some extent and be getting all that set up, and then just get the okay and get things signed off to get like a situation where a terminal illness can be paid out. Because what does that mean? Well, it might just mean you get one last family holiday together,
Yeah.
right, before the passing of an individual. And it might only be it might be a week away or something like that. But, you know,
Or
yeah,
even at the bigger end, the person
that's
about to pass away can see that they've left a house unencumbered to their family, and they can go with
yeah,
a
that's
little bit
right.
of
It's
peace
like,
when
yeah,
that
I mean,
happens.
yeah, that's right. Like, yeah, yeah, if they're in a sound mind still, they can, you know, help with decision making around that. Which, the surviving spouse, depending on situation, might not be, the greatest person to be sort of doing that, especially in a situation after someone's passing.
Yeah.
So, yeah, it's definitely something that I think should be probably talked. It's not talked about. It's definitely not talked about anywhere near enough. Like, you really don't hear about too many of these claims. Like, I know I haven't done one, and yeah, like the sort of media colleagues in the industry haven't done, like.
It's funny you say
But it'd be
that. Yeah.
interesting for some of the insurers on to sort of talk about how when that's triggered, and maybe that's something that they can help in terms of promotion of the industry and the underinsurance gap, and sort of talk about that type of benefit. It's a really good benefit.
Yeah.
That's, I would say, is underutilized.
And that idea of the family holiday, I think, is such a good example of how that is. And when we say promote the industry, we're talking about the more people we can get insured, the better the financial outcome for their family. But also, the more people in the pool, the better it is for everybody. So, life insurance,
Well, yeah,
it needs
it's
to
going to keep premiums
lower. We need more people in that pool, and I think there's also some tax consequences. The person who is about to, who is very ill, has a bit more control over where things go. I think it's something that should be looked at a lot more. But it can. I'm thinking of a person. They contacted us and they had esophageal cancer, and they've been told it was terminal. So we lodged the terminal illness claim, but they cancelled it. They didn't want to go ahead with the claim because they've been told that the prognosis is a little bit more positive, so it looks pretty good. I don't know how true that is, but it's very much. I think it was just confronting the fact that it was imminent, and they just didn't want to lodge that claim because it was confirming it. And you're right; it's a very heavy emotional burden, but you can make things a bit easier for your family. If that's something you are facing, again, I would say reach out to the advisor that's involved. And it's interesting you say that about if you have a network of advisors around you, this whole process can be a little bit easier. It's not easy, but it's easier. It's been a recurring theme. Every episode, we've talked about the same thing. And I've been trying to work out, because it sounds like self-interest. Like we're all saying, yeah, you should get professional advice. But it's also because we've seen when it goes wrong. We've seen when it hits the fan and the importance of what good advice can make then. which flows into kind of the last section I wanted to cover off. Life insurance is paid out. How have you seen that interact with, I guess, the surviving family or the surviving business's bigger picture? So, an injection of $1 million or $2 million into somebody's life. Can you talk us through what kind of impact has that had from what you've seen?
Oh, well, you see, it enables what you advise on effectively. You advise. Well, it's pretty simple, you know. Like I think the old days where you're trying to cover off on 10 different items. Look, there's probably people still doing that. Fantastic, but effectively, you want to be, you know, you've got a young family. You want to be eliminating debt on the principal residence,
Mm-hmm.
and you want to have a lump sum in conjunction with their insurance and super and other investment assets that's going to provide an ongoing income stream. And that's really what I've seen too much. I mean, yeah, in a lot of the cases, the debt's been, you know, well on the way to being paid out. So it's more a case of there's just been a lump sum to provide that ongoing income stream. And it means that, yeah, the surviving spouse does not have to go back into the workforce straight away.
Mm.
Um, they don't have to be going into the workforce, you know, full time because, yeah, it's pretty impactful. Like the situation is very impactful on the family, on the children. So, you know, the surviving spouse, they want to be there
Yeah.
for the children. So, you know, the ability to have that lump sum that's providing the ongoing income stream, that's where we're sort of seeing the impact, and that's what we advise on. And that's why I tend to, yeah, I mean, I don't consider it over insurance. Probably some people would consider it over insurance, but yeah, you can really sort of, you know, get good quality cover at a life from a life insurance perspective at, you know, relatively low premiums.
That makes a huge difference at a really critical time.
Yeah, yeah. It's like, yeah, you know, for the sake of a couple $100, you can be talking a difference between like, you know, $500,000 of coverage,
Mm.
right?
Yeah.
And invested conservatively at 5%, that's going to generate an additional 25 grand of, you know, income
Mm.
per annum. And, you know, that will cover, you know, if their kids are in private school, that covers one kid's private tuition
Yeah.
for a year.
And I mean, there are exceptions, and it depends on where the money ends, but that's largely tax free, right?
Yeah, correct. If it's paid, yeah, if the funds, well, yeah, even if it's funded from super, if it's paid to a dependent,
Mm.
the money, yeah, the benefit's tax free. Yeah.
So that's 500 grand for a couple $100 a year, tax free, can transform people's lives. You mentioned debt. Okay, so back to Jack and Jill. Jill's received a $2 million payout from the insurer or a claim. They owe $1.5 million on the family house. She's taken over the house simply because they owned it together. Does she have to pay that money to the insurer, to the lender? Like they can't come to her and insist on it, can they?
No, they can't, as much as they might want to, but no, they can't. And again, yeah, you're best to speak with an advisor. I know it sounds like we're saying speak to an advisor, but it's like I'm not here saying come and speak to me, and I don't think you're on these episodes saying come and speak
No.
to you. Like, you know, just reach out. Like, there's a lot of good advisors, right? We're just like we're talking thousands of them,
Yeah.
right? So go and get an advisor, and you, as part of the death benefit, you actually get a financial planning fee,
Mm.
like rebate paid out with it. It's, I think, like depending on the insurer, it's like averages around 5 grand,
Yeah.
right? So, you know, that's going to go a long way to covering, you know, so it should, like in that type of situation, someone's going to, I don't think they'd be charging you more than that.
Yeah.
You know, for a relatively basic plan in terms of what to do with those proceeds. And yeah.
And it may be that you're better off, but you get that advice, really, isn't it? That's the key.
Yeah, you get the advice because it's like, well, you might not, you know, depending on the situation, it's like you might be best to not pay out the house fully at the time. It might be best to, okay, knock a fair chunk off it, but do something else with the residual proceeds or, yeah.
And that's where lending capacity, it becomes very complicated. And I think that's where it can really overwhelm some people because now they're having to talk to the bank, and the bank's this big scary idea. So by reflex, they shovel cash at the bank to make them go away. But as you're saying, that's not always the best outcome. Particularly if the claim proceeds is less than the loan amount, paying it against the loan may not be the right thing. It may leave you short of funds.
Absolutely. Yeah.
To wrap it up, we were talking about what's needed to actually pay out to start the claims process. And there's one document that wasn't mentioned because, which might surprise some people, isn't required. Do you need to lodge a will with a claim?
No, not on my understanding.
No.
No,
No,
not,
yeah, that's
not
why.
that I've ever.
That's why I bring it up. Sorry, I feel like it wasn't a trick question.
No,
Sorry, I made it sound like a bit of a trap.
no, mind because like I haven't. I'm just like I haven't done that. I was like triggering I'm pretty sure it wasn't one of never got a requirement for that. So
And it's one of
yeah,
the things that I've liked learning through this process is that because it's outside of the estate, the will and probate, which we've covered in another episode, that could take 2 years. But the life insurance could be paid out, as you're saying, within a week or two. So you should, if you're worried about probate holding up a claim, if you're listening to this and you're kind of in that weird space with probate, they are completely separate, which I think is evidenced by the fact that Stephen's never had to lodge a will with a claim. They are completely separate entities, separate beings. It's different, I think, if it goes to the LPR. I think probate's required for that, but very little life insurance, I think, goes straight to the LPR now. Yeah, so it is separate. Just treat it differently and get the claim in because the money's going to help you have a bit more financial peace of mind. To Stephen's original point. Stephen, we've covered everything that I was looking to cover. Did you have any last thoughts for people that are kind of in this space where they've got a claim ongoing, or they're thinking about lodging a claim, or they've just received the proceeds? Any last kind of points?
Oh, look, I think we've said it enough until you go and speak to someone. I think definitely, if you're, yeah, if you need to be lodging a claim, yeah, definitely be reaching out to, most people haven't advised. Go back to the person that you took out the policy with, first and foremost, if they're still around, and that's what they're paid to do, in terms of the remuneration they receive from the insurer. So, yeah, definitely reach out to your advisor. That's part of the service. If you've got listeners that with young families that don't have life cover, just go and get it. It's a very simple process to obtain.
For a huge impact.
Massive impact. Massive impact. Absolutely.
If anybody has any questions for you or wanted to chat or wanted to work with you, I know the clientele you're working with is very specific and very niche, but if anybody wanted to get in touch, where's the best place to find you?
They can go to my website. It's probably easier, and all the details are there. I don't know. Is one of those drop down things going to come up on the screen?
Let's not overstate my editing skills. I'm going to be lucky to getting it published.
Integer Financial Group. Yeah, Integer integerfg.com.au. And if I can't help you, I work with a number of advisors that I can get to help you. But there's what I think there's just under 16,000 of us in the country.
Might be less now, but yeah.
Might be less. So better hurry to go and nab one of us while you can. So
I think I would argue that the ones that are left now are pretty good quality. So you're going to have a much greater strike rate with the ones you find. Stephen, thank you so much for coming on. Hopefully it's been useful for people listening. So thank you. Thanks again for listening to Life, Loss and Legacy. If you do have any questions for Stephen, check out his website. Otherwise, you can reach me at jordan@planningsolo.com.au. Until next time, thank you for listening, and we'll see you in the next episode. Thanks a lot.